The benchmark Nifty index has once again broken below the psychological 17K mark in today's trade. With today's 219 points fall, the index closes at 16,958, and just 3 days back it had closed at 16,969. But that time the index did manage a 2-day bounce back. Are we looking at similar bounce back sometime later this week? Good evening, traders. We are on the 25th of April 2022. It's a Monday evening, 11 minutes past 8 p.m. and we had to deal with the gap down in today's trading session. The intermediate time frame has now clearly shown signs of a reversal, and there is a tug of war happening in this zone wherein the bulls are trying not to give away without a fight, but most of it was lost in today's very open. So what happened in today's trade? If we take a closer look at the 75-minute time frame, these are the 5 trading sessions, out of which 5 75-minute bars in the trading session for the day, to be precise. And this was the opening bar, which the index broke later in the afternoon, managed a sharp bounce back towards the afternoon, but never actually threatened the high of the opening bar, which is very close to the 17K mark. So 17K mark and scaling above the 17K mark is the bare minimum sentimental psychological requirement from the bulls, or else the selling pressure is very likely to persist. It does not mean that if it goes above 17K, the downtrend is over and we are heading towards further highs. It doesn't mean that. What it means is bare minimum 17K needs to be taken back. On the downside, any slip below today's low, which is very close to the previous swing low, is 16,875, can definitely open up further downsides. A simple Fibonacci of this previous rally from this low to this high clearly is suggesting us that we are dealing with the 50% retracement level, 61 and then 76, 78.6. So couple of times we have seen the 50% managing pretty well to hold the index. But what bothers me a little bit is the transformation, is the shift of the underlying intermediate trend. Last time we saw a reversal in the intermediate trend. It did lead to a pretty decent correction. So let's see. Not easy times to trade, difficult times, especially with the underlying volatility. In fact, if you follow my market views, been talking about couple of weeks back that if 17,500, 400 is given away, then the volatility will increase, and that's exactly what we are dealing with. High range bars on both the direction makes short-term traders' life really difficult. But we also notice a very strange, unique behavior from the market. Last week, when the index was managing to bounce back, the bank Nifty was underperforming. And today, clearly, we see a 219 points down move from the Nifty and 56 points positive move from the bank Nifty. We don't get to see this frequently. This is a rare phenomenon, which means that the bank Nifty is trying not to fall. Chalo dekhte hain isko. The bank Nifty managed a far better bounce back from its intraday lows. And if we drill down to the 75-minute time frame, there you go. You can notice that the bank Nifty had clearly taken above its opening bars high. And this was primarily from the private sector banks. Starting off with ICICI Bank, later on throughout the day, we did see some movement coming in Kotak Bank. HDFC Bank, after a series of down moves, have finally shown a bit of strength. So, will it be the bank Nifty that will lead the bounce back? See, the bank Nifty has clearly shown weakness to move into an intermediate downtrend, and 36,800 towards this level, which is 36,800 and 37,000 kind of levels, will be obvious immediate resistances for the index. So any kind of bounce back from here on can help the overall markets and the Nifty to scale above 17, but we should consider this with a pinch of salt. Volume profile, however, is clearly suggesting us that seen some decent volumes right above that 35,600. That's where today's supports, today's lows were. So these are not bad levels for the index to face some support, maybe some bounce back, maybe extension of this move towards 36,800 possible. So you should keep an eye on the banking pack. If you're a short-term trader and you're expecting a bounce back, then you can definitely take a look at banking stocks, preferably within the private sector banking. Let's take a look at it. At least you get to see some greens here. So you had Bandhan Bank, HDFC Bank, ICICI Bank, Axis Bank, Kotak Bank. These are the ones that gained somewhat. Out of this, the one which is going to be a contra play is well placed and pretty ripe for a bounce back or contrarian bounce back, a reversion to mean kind of a trade towards 1400, maybe HDFC Bank. And the one which can show some strength and can carry it forward are the two, which are Axis Bank and then ICICI Bank. But as I said, I'm going to consider this with a pinch of salt, and this will be primarily from a very short-term point of view. Going back to the sectors, most of the sectors were all red, except of course the Nifty Private Bank. So we are in a situation where we have to deal with volatility. We have to now deal with gap downs and maybe gap ups also, who knows. But times are difficult. Trends from an intermediate time frame are shifting on the downside. Participation across the board, across most of the sectors. Pocket of strength limited to few banking names and stocks like Reliance Industries. So not a very comfortable picture. We can get a bounce back, but whether it will sustain or not is the main question. If we take a look at the global markets, we can see a bit of bounce back from or stability from the US markets. S&P 500 is down 30 points, little less than 1%, but it had been a very sharp sell-off for the index over the last today is the third session. What is importantly, what has happened is crude has sold off over 5% and it's sub $100 again. Crude did manage a pretty decent base formation in these levels, and that's exactly where it's dealing with. So some support from equity market perspective, the softening of the crude prices. Gold also has kind of disappointed this breakout big time and now has slipped into on the verge of slipping onto an intermediate downtrend. Big sell-off, and this guy also is now very close to its previous swing lows. But this severity of this fall clearly indicates that it is probably eyeing these kind of levels, 1850 kind of levels in the international markets. SGX is 28 odd points positive, scaled above that 17k mark. So maybe tomorrow the index will try to consolidate today's 219 points down move. Amongst these stocks, I would like to spend a little bit of time to discuss Eicher Motors. Now, the reason I wish to talk about Eicher Motors is the stock has been a relative outperformer and it has given us a nice trend reversal. The trend reversal has gone through series of correction and follow-through moves. These follow-through moves have taken itself prices above its previous high. So the nice structure of an uptrend has got established. During this correction, if we draw a volume profile just to understand the play of volumes, you'll see that majority of the volumes, of course, it was range bound activity here, happened in this zone. And if we kind of extend it further to the right, so it's dealing with some serious resistances. Momentum wise, structure of the trend wise, it is improving, has improved, has established itself into an uptrend and now needs to deal with some decent amount of resistance. If it manages to, means what I mean that if it doesn't slip below the 2500 mark, if it continues to stay above that, the probability of dealing with this resistances well enough for further extension is at this juncture relatively higher. On the flip side, a slip below 2500 would be a little disappointing for the stock, which will mean that this uptrend is probably over. So I think this week and the next week will be interesting times, important times for Eicher Motors. As you can see, as I drop this volume profile, clearly 2477 comes as the point of control. So a lot of decent amount volume has happened in this particular zone where the stock had managed a couple of times bounce back. So yes, if you hold Asher Motors, you would like to keep a very close look at this stock over the next couple of weeks at least. But yes, if it manages to scale above 2700, then significant upside definitely opens up. Strategically, I feel that one should not create any directional bias right now for being extremely bullish or bearish. Difficult times, I understand, we understand, and so keep ourselves flexible and look to do as short-term trades as possible either direction, because I think the markets are going to give us opportunities in both the directions. Take care of yourselves, trade well, trade wise.